All right, what's going on, everybody? Another week, another Ask Me Anything happy hour. We're very excited to be here. We're excited to answer your questions. So make sure while you're listening to this awesome night driving, soothing, relaxing music, make sure you get those questions ready, and we will be right back after this not so relaxing music. All right. Well, that went good.
We are a nice touch, Jason.
We are here and ready, and Drew said it's party time. We don't have any pre-submitted questions, which is surprising because we had so many questions on the Wealth webinar today. And if any of you were joining us for the Wealth webinar, thank you for joining us. It was a lot of fun. I got to just go places we haven't gone in a long time with the rock design. So we got Organic Tribe coming in from YouTube, but let's kick off. Let's just start up with the top with Shauna and just kind of go around the Brady Bunch menu here and have everybody talk about what they're doing.
I'm in that final stretch of the anxiety of planning catering for next week's event that we got on site. So I love to put a couple things off last minute and then stress myself out about them right before. So we got an event next week here in Buffalo that I'm really excited about, though. And that's it. I'm up here. Let's go over to Mr. Fouts.
That's right. Hey everybody, Brian Fouts here up in the Pacific Northwest. Just kind of having a calm week this week. Been traveling a lot. Probably going to be getting northern Idaho here in a little bit. Where the rest of my family's been at for the past couple of weeks, but yeah, it's kind of been calm this week and working on a lot of very unique cases as always. So with that, go down to Linus.
Hey, Linus Knoll from Hopkinsville, Kentucky. I work on a lot of applications. So right now I'm busy helping a lot of different people set up their policies and get them going. So I have a lot of fun with that. Sorry, I actually had a mind blank. I was going to say something else. Oh, so here, all right. So I'm going to the Money Multiplier Mastermind in October here in Nashville. And I'm close enough to drive, but I think I want a hotel room. I have some credit cards with a bunch of points on them. So I'm getting ready to see if I can maybe book it without a single one of my own dollars or earned dollars, I guess. Mm-hmm. And over to Carson.
I love it. What's up, guys? This is Carson Herleen coming from Southern California. I am one of our money mentors. I work with a lot of the people on this webinar and on in our community, teaching infinite banking and helping people set up their own banking systems. I also personally have my own little businesses that I'm doing, investing in real estate, doing a podcast where I talk about real estate, investing with IBC. And I'm on these webinars usually every other week with everyone. So a lot of you probably know who I am already, but those of you who don't, that's a little about me. And let's go over to Mr. Craig.
Hey, good afternoon. Craig Yenny here. So I am primarily what I've been doing is building tools, working on case studies. So we've got a lot of events coming up in the next, couple months. We've got the advanced training, the 3-day, we've got the Nashville trip that Linus was just talking about. So trying to build content and use cases for those. And just as kind of a side funny, a lot of you know that I am a fan of dad jokes. And so my daughter was asking just about trips for this summer. And I said, yeah, I'm heading out to Nashville. And she goes, what are you doing out there? I said, well, I've been asked to speak on a stage in front of 200 some people telling dad jokes. And she got really, really worried. But I'll leave you with the dad joke. Someone knocked on my door yesterday, broke my concentration, went down there, answered the door. And as a kid, looking for donations for the local swimming pool. So I gave him a glass of water. All right, Jason, it's yours.
Thank you, Mr. Yenny. Thank God you're good with the sheets, man, in the sheets, man. So that's good. So Jason's Ripple down here in the city, beautiful. And yes, Carson, it is still beautiful. founding fathers tomorrow. We're going to go back all the way to Caesar and explain inflation, explain the invisible tax that we're all seeing today, and talk about why and how you can take back control of your money towards the end. So we're going to go all back to Caesar. We're going to compare that to today, and we're going to bring that all the way forward to what you can do about it. So over to the man sitting in the awesome dojo, Mr. Gabe.
Hi, everyone. My name is Gabe Ratana. I live in Maryland, in Newmarket, Maryland. I've been with the Money Multiplier since 2019. So I'm in year 6 of my first policy, and I've been just doing my best to learn how to use it and keep getting better at this, learning from the master. So I'm excited to be here and helping any way I can.
Master, I mean, you just told us that whole dojo is paid for by your infinite banking and your equipment, and you got other stuff on, right?
Yeah, but there's a lot of mistakes I've made, and there's a lot of things I could have done faster, but I guess maybe I'm a little hard on myself. But it's pretty cool the way, we learn from you guys at a high level, because when you learn how money works, you can apply that to just how business works in general, because that's what business is, right? Is moving money from the consumers to the producers in the most efficient way. And I've been able to just learn a lot. So I don't know, I try to be a student first and learn from the best in the world, like you guys. But it is pretty exciting that I get to live my dream life every day. So it's and I would like to contribute more to sharing the stories and getting the message out to people. So yeah.
Awesome, man. Thanks for sharing.
All right, Shauna, what do we got? We got any questions? I see a couple of them pop in.
We got one so far, and then I just want to double down on what Jason just said before we went live. Gabe, moved his camera around and was showing us the whole dojo and everything that he paid for through his policy, which was just really awesome to see.
Yeah.
Love it.
So Drew is saying, question, when you say it takes 30 days before you can take a loan on your policy, is it 30 days from the point the premium is taken from your bank account, or 30 days from the time you sign the doc or deposit?
It's a great question, Drew. And we say 30 days. It typically will not take that long. It's really, how long is it going to take for the policy to be enforced? Meaning, how long does it take for your bank to let go of the money and have it in force? And then once it's in force, it's just setting up your ACH, right? Setting up the documents to go in and take out the loan. And it's usually within a few days. I've never had to wait longer than 14 days from funding a policy to have the money for a loan. And I've had it happen faster too. So not really 30 days. We're just using it to say, hey, if you're slow signing things, slow moving things, it can take that long. Or if the bank's not releasing the money, it's just trying to give you a under promise, over deliver kind of scenario. So I'm guessing that means he hasn't taken his loan yet from Lori's policy. Let's go, Drew. What are you waiting for?
He's saying, I'm still waiting for my One America account to show up in my account. It's been 17 days so far. So that's interesting. Since his money
So it's been 17 days since the money was pulled, and
pay for the premium.
Yeah. So let's see, from I want to show up in my account. So you're online looking. I would definitely call him and ask. Yeah, that seems like a long time.
Yeah, that's a while.
That's a long time.
Yeah, I think something might be wrong there, because it would usually show up before the money even leaves your bank.
Right.
Yes.
Something definitely not right. But Drew, it seems like you're always good at finding those things that if something can go wrong, you are usually very good at being that test pilot. You're the guinea pig.
And Drew, man, I hope you didn't do what I did. The first policy loan I did, I actually, instead of filling out the routing number, I did the wire number because I was so excited to get it done. And all the money that I requested was lost between Bank of America and One America for a couple weeks. So
I remember that now that you mentioned that.
Yeah, it was a good time. Good time. Holy angry typer. Who is that?
Brian, I can hear.
It's not people asking questions. That's it. There's
Yeah, for
no
real.
questions in here.
No, it's literally like, I didn't like what I heard.
I'm getting thunder outside, and then I got Shauna on the keyboard. I'm like,
It's not me. It's somebody else.
I'm gonna leave her like a twitch. Like, oh my god! Like I have to go like.
Here we go. We got something.
Yes. Okay. So Amir's
Drew,
saying.
Drew, I see that you have available loan balance ready to go in Lori's policy. So I don't know why you're not seeing that.
It might be a dashboard thing, maybe where his dashboard's just not reflecting the reality.
it sounds similar to what Linus was just saying, where I'm guessing, Drew, you haven't seen the money leave your bank account, but there's a balance available showing up in One America. So maybe they haven't actually pulled the funds, but they're showing the credit in your account. So Drew, if you want to just confirm, is it that your money has not left your segregated bank account?
I think it has, because he said it's been 17 days since the money was pulled.
Yeah,
Okay.
he said they definitely pulled the funds, just not showing.
Oh, they
it.
pulled the funds. Okay, yeah, it's something to look into.
All right, and then Amir's got a question. Says, my wife just got her life insurance license, and she would love to figure out how to offer IBC to her future clients. What's some advice you can give us to offer IBC as a concept?
Use it.
I mean, you got 1,200 videos on my YouTube that could serve as probably the best training course you'll ever get. I would highly, highly, highly recommend she reads Nelson Nash's book, Becoming Your Own Banker. That's a must. I would also say, if she really wants to do it the right way, go through the IBC practitioners group, try to get approved into that. I'm not saying that you can, but I would definitely submit, try to get, to become an IBC practitioner. And otherwise, the biggest thing is she has to understand that it's love to figure out how to offer IBC to her future clients. IBC isn't really, I guess I'm just going into semantics. It's not really something you offer. It's something you teach your clients. Yeah. And, I think that's a better way to say it. So instead of offering IBC, it's teaching IBC, because really you're teaching a process. And then just learn how to build the policies, learn how to do it the proper way, learn how to support the clients after the policy goes in force, which I think is one of the biggest things this industry is lacking. A lot of people out there saying they'll sell you the specially designed whole life, but not a lot of people out there saying, hey, once your whole life is issued, let us help you administer and implement the infinite banking concept, because that's where the rubber meets the road, is the implementation of the process, not the policy. Policy is not going to make anyone rich.
It is the process of moving money. Sorry, Craig.
Yeah, I would just add to that as well, is just start using it yourself. So find some, whether you have a car to purchase or maybe you've got some debts, start using it yourself and learning about your own experiences. And I think you'll learn a lot that way as well.
Yeah, good point.
Doing it is the best way to learn.
I couldn't agree more.
Dude, Carson, where can I learn to type like you do?
It's not me.
Somebody's typing really fast out here, and I'm not that fast. I'm actually fairly new to technology, and so
maybe it was Joe this whole time who's just been patiently waiting.
Really?
He's doing it on purpose. We know that.
No, we really are the Brady Bunch.
Typing that fast. I know Joe is like me and probably Craig and had an actual typewriter.
Yeah, you remember when they put those little cardboard shields over the typewriter so you couldn't look at it, and then you had to kind of find the letters?
No,
I had that for keyboards. Yeah.
No, we just didn't look at it. Just had to look.
I didn't spell one word.
You couldn't spell one word?
Hilarious.
It was actually probably one of the most useful things I did in all of high school, is learn how to type.
Well, guys, throw in your questions in here about IBC, where you're making us just chit chat. What do you guys want to learn about?
Well, we can go back to Amir's question of Brian said it too, is just use it. Like, you could ask all of us, what we've used infinite banking for, and we all have an answer. Like,
yep. Hold on, Carson's going to record all this. This is going to be all of his material. He's going to be posting all this.
There we go.
Around the room. Ready, Carson? You can ask us the question. We'll go around the room.
All right, ready? You guys, I'll record you right here.
Oh, we do have a question.
All right. So Dallas is saying the death benefit change the dead benefits change in value when open the policy and continue funding it? So do the death benefits change in value when you open the policy and continue to fund it?
They're always increasing. So
Yeah.
because
Correct.
you're putting in PUAs or paid up additions, which is additional insurance, your death benefit along with the cash value is always increasing, which is a major benefit of infinite banking versus other types of insurance, by the way. So, yeah, so it's always increasing.
Yeah.
That's one of the cool things. This actually was a conversation I had with a client here 2 weeks ago that was very powerful. They had a traditional retirement plan. They didn't like it because they're saying, wait, when I pass, this is going to go through probate, maybe taxed, maybe not, depending on their net worth. And then my family's going to get that amount. I don't quite like that because it just, something doesn't feel right. Then we showed them a policy where they were going to be pulling out a certain amount of that qualified plan into an infinite banking policy. Bottom line is, though, 15 years down the road or 20 years down the road, when this person graduates, as we call it, they're going to have 3 or 4x that money through the death benefit. So their family, instead of getting, in this case, $400,000, is going to get like in the 7 figures because that death benefit is always increasing. And when they saw that, they're like blown away, saying, "Well, wait a second, is that taxed?" I'm like, "No, it's passed on, guaranteed, tax-free." And so all of a sudden, they realize they're creating generational wealth in a completely different way than they were before. I mean, they're like holy cow! Why am I not doing this 10 years ago? Why are not more people doing this? So that's a very powerful benefit of that death benefit.
You could pick any question that you've been asked or any statement and say, if I could have $1 every time I heard that, what would it be?
Yeah.
I wish I had learned about this earlier. If I had learned about this 10 years ago, if I had learned about this 20 years ago, 5 years ago, like whatever the person's age, they're always like, man, I wish I would have learned about this earlier. And then you always have to tell them, it's okay. It's okay. It's a Chinese proverb. When's the best time to plant a tree? 20 years ago. When's the next best time? It's today. So you hear that
the same thing about jiu-jitsu. It's like, once people finally figure out what it is, like, oh man, I wish I would have started when I was 5, 10 years ago. I learned about infinite banking in 2014, but I dragged my feet and I didn't have my money right. And then I finally hit up Brent 5 years later because I met Brent in 2014 at a presentation that I kind of snuck into. And 5 years went by and then I finally started it, but at least I started, right?
Yeah. Yep. Yeah.
That's awesome. You hear that a lot too. People, I've read Nelson Nash's book 10 years ago. I did this, and then a lot of times too, which it's been a huge blessing. It's because of this group and the content that we're putting out there, because of the total transparency we have. Like we're like, I'm literally talking about the stuff I'm learning in the Nelson Nash practitioner guide. Like that's the stuff I'm teaching. Like, oh, this is a cool story. Let me turn around and tell this and try to make it simpler. Because sometimes I listen to an economist tell the story and I'm like, oh my God, I'm holding on. I think I can get it. Wait, what did he say? And I'm going back, like writing it down and trying to make it simpler and simpler. But it's really us just trying to make the complex simple and bringing you guys it the easiest way we can so you can use it.
Yeah, the concept is actually quite simple, once it's laid out. But I think, a lot of times it's got to be shown in a visual way. And I think what you just said, Jason, about, just taking what some people articulate as a complicated thing and just simplifying it. There's nothing complicated about it. It's just very different than what you've been taught your whole life. So I think people often say, oh, it seems complicated. I've heard that a bunch, it's so complicated. It just seems like it's, hard. And, other agents, like, a bunch of those YouTube haters of IBC that we've tried to debate that never will. Their things always like, oh, it's so complicated and easy to make it so it doesn't work. It's just like, what's so hard about this? It's exactly what you're doing now. You're just changing where the money goes first and who the check gets written to after that. It's like, this is not hard. And, they're always saying, oh, well, it'll fail if the person, drifts from it or doesn't, be consistent and persistent with doing it. And it's just kind of like, to me, when I hear things like that, I'm just like, once you do this, once you see how this works, why would you ever do anything but this? It's not hard. It's not complicated. Like, I know once you get a bunch of policies, like I got a bunch of policies, it got complicated because of the loans from all of them and the tracking. And, I made the decision to go to a CB line of credit, and I'm paying more in interest for that CB line of credit, but it simplified the process, which was more valuable to me than paying, a couple points less in interest, because the way I'm using it, I'm always recapturing money. So it didn't matter that I was paying a little bit more in interest, because I'm always buying that rate down, something Craig talks about a lot, when he trains, and he's built calculators to show like that buy down. I'm literally always paying the loan down, which means I'm always paying less interest every single recaptured payment. And I think what I'm going to start doing is, this kind of came to me with Kristen when she was in town. Instead of calling, the recapture recycle of the payments you're giving away, I'm going to start rewording that to try to make it more fifth grade. Instead of saying, okay, just pay the payment to yourself, I'm going to say that money you used to give to a bank or a finance company, that was a liability. And now we're just changing that liability into an asset. That money you were giving away is now savings you get to keep. And all you're going to do is you're just going to change where that savings goes first. So I'm just going to get right back to that savings goes first part, but I'm not going to call them payments anymore, because I just think in people's minds that's bad. It's a swear word, but calling it savings is a much better word.
Yeah.
I think maybe you change it, instead of liability and asset, just change it to paying to now saving.
Yeah, just keep it simple, right?
Take it simpler. As soon as you said, I'm going to make it simpler, I'm going to make it a liability, I'm like, hey, it's simple. People are like, what the hell are you talking about? What's the liability? So savings and paying. Here's something cool we've been doing. Since there's not a lot of questions, I'm going to tell a quick story that landed with somebody the other day. We were talking about the MEC, and they were asking about, like, what's this mean on my, policy illustration, this MEC 7 pay and this. I was like, think of it this way. There's a line right here, right? Here's the line. This is the MEC line. You go over this line, anything over this line, it becomes a qualified plan. All of a sudden, you're back in business with the government. Everything is a taxable situation. If we butt it right up to this line, it's going to be called a max efficient, it's a max efficient plan. That's what we're looking for. That's your max efficient thing that we're designing for you. And that's how we design them. Like, oh my God, I get that now. Just doing the visual. One line. This is a max efficient contract. This is a MEC. Anything above that line. Think of it that way. What kind of other questions do we have here?
We got 2 questions here. So Living the Life says, hi guys, can you discuss the pros of gifting a policy for a grandchild, and for how long would I as a grandparent have to pay into the policy? Thank you. This is a great question to debate about.
I do want to correct one thing in the question in terms of just mindset and verbiages. As a grandparent, have to pay. So it should say, as a grandparent, have to deposit into my grandchildren's, policy or banking system. So you're not paying anything. You're saving. If you keep thinking of it as paying, you're not going to make it very long. And I can tell, like, just in that, like, how long do I have to pay? Of course, right? Like, nobody wants to pay for a long time. So, but you say, how long can I save? Instead of how long do I have to, you say, how long can I save money for the grandkids? Changes the whole thing. Like, it changes everything about what you're asking about. But the simple question is you can build it to, make premium deposits into their accounts as long as you want. And you could do it for 10 years. You could do it for however long you want.
Well, Chris, when Viv gets to retirement age, you put how much into the policy, and it gives her how much she can spend?
I don't remember. That was on her first policy. Her second policy went in force. I can't remember.
I can show you. I have it right here.
It was your one of your posts today. I saw that. I'm like, oh, she was driving around the little red car, right?
Oh, that's right. We did put that up on Instagram, didn't we?
Yes.
Well, do you have
I'm the one good example for living.
I don't have a clue what's going up.
It changes the language, right? Because when we're saying, like Chris said, how much do I have to pay versus how much do I get to put into this? How much do I get to deposit? Like Chris will tell you in a moment, like how much he's putting in year what, and then it's giving him multiples of that she can use in her life.
Yeah, at age 30, I put in 145 into that one, and her cash value is 275. Age 65, she's got over 1.25 million in cash value, but it's actually a lot more cash value than that. It's just that is just giving you the cash value, minus the loans that we've already taken out of the policy, if I'm not mistaken.
Yeah,
it's all off Vivi Lucky Jeans.
So one of the ways I would approach this, living the life. You have expenses, and you might be in retirement at this point. You might have some expenses, could be medical expenses. Maybe even you have a new car to buy. And so if you think about combining things together, we often talk about and. So if you were putting funds into the policy for the grandchildren, there's still the ability for you to use that while you're alive. And when you graduate, if you've got any sort of death benefit or any sort of life insurance, that can be used to refill their bucket, right? So if you've used the cash value in their policy, when you graduate, some of your death benefit can go back and fill up their bucket again. So I would look at this as if you've got that kind of a situation, and this is kind of what Nelson Nash talks about with the legacy planning, where grandparents buy policies for the grandchildren and it just keeps hopping a generation. You can use that cash value while you're alive and then gift it to the grandchildren after you graduate.
Yeah, and also too, I feel like I missed something with living the life, because he was asking about gifting. So there are gift limits. So it's 18,000 per. So I put it up in the chat. The annual gift exclusion was 18,000, in 2024, and then there's a total lifetime gift, but that's quite a bit.
My 2 cents would just be making sure that you show the value of it before you pass it over to. Like you want to build that excitement or like the value in it. I just fear that if somebody doesn't know what they're receiving, that's how they receive it. They're just like, what is this? So you want to build the value, I think, in showing how it works and why it works and all the things that you could do with it. And then like when you can't drive mom or dad's car because you're not old enough, and then you want it and finally you can have it.
Piggybacking that, I think that is the biggest gift, is teaching them how to use it too, so they don't end up using the third-party banks and they give the control back away, right? It's like, once your family tree, like, be that one person in your family tree that takes back the control, and then you pass on the knowledge, not just the money.
Well said.
All right, any other comments on this before we move to the next question? Okay. So Jonathan is saying, what are you currently using for your policy loans for? Specific investments or other expenses?
Yeah, and I just want to go back to Jonathan. I did post a video that I put up on YouTube. The video is actually called "They Bought Alpacas: The Strangest Uses for the Infinite Banking Concepts That You've Ever Heard of." Just felt like that was pretty appropriate for this question.
So they bought alpacas.
I didn't, but
not yet. I heard alpacas get along really well with cats.
Well, I'm out of room in the garage now, so I can't fit any alpacas. The cars have filled the garage.
I saw that. It was a tight squeeze getting that little red car in there.
Oh, but she fit just fine.
So 2 years ago, I used my cash value to pay off a 0% interest loan. Does that even make any sense?
All the sense in the world for cash flow.
Mm-hmm. So it wasn't even like I was avoiding for credit card interest to come back. It wasn't a 0% introductory period. It was basically a free loan from a family member. But yeah, Chris, go ahead.
No,
Chris,
yeah.
What was the best thing that you bought so far? Maybe like a week ago or 2 weeks ago? Didn't you get something that's kind of like on your dream bucket list?
Yeah, it's right here. Yeah, it's the 1979 Porsche 930 Turbo. And that was bought with the policies. And then that other one over there, the Turbo S, is bought with the policies, but not yet. Those jerks over at the dealership wouldn't give me my price because I negotiated the price down. They wouldn't give me the price I wanted unless I financed through them. So I said to the finance manager, can I pay this off next month? He's like, oh, please don't. At least make 3 payments. So I got to make 3 payments to the devil bank. And then after that, I can pay it off with my policies. But the money is in the policy. You're waiting to go. So like primarily like what I'm using the policies for, I mean, I've used it, for making sure Shauna gets her paycheck back in the early years. That was a loan to the company. I used it for the copy machine. that we have here. Instead of leasing the copy machine through the company, I bought the copy machine and had the company pay me the exact amount we would have paid to lease it, which works out to be, I think, like an 8% interest rate that I'm earning on the money. And then I get all the money back for the damn copy machine. Not a bad deal. As of lately, it's no secret, I've been putting it up a lot. I've been definitely buying a lot of cars and using the policies for cars just because I'm not really lending as much right now. I mean, I'm doing a couple private loans. Like right now, I got 3 private loans we're working on doing, but very small private loans. You know, I'm kind of a little bearish right now on putting any more money out in real estate until after we get through the election and kind of just see how the economy is going to shake out and how these interest rate decreases that the Fed's probably going to do in September are going to affect all of this. So I've just been super conservative right now. You know, I think so. Most of what I'm doing with my cash value is just having fun, buying cars that will kill you. So some people, you know, think, I don't know, snakes kill you or guns kill you. There's a car called a Widowmaker and it will kill you. And I'm a bit scared of it. Not gonna lie.
Those are funny.
Surprised the death benefit or the insurance company applications don't say, do you own a Widowmaker?
They will now.
Non-insurable.
They will now.
They definitely ask if you're into car racing or vehicle racing.
Eve is
I gotta
saying,
run. I gotta go teach jujitsu.
thanks,
I'll be in
Gabe.
class.
See, Gabe.
All right, you guys.
All right,
See you
man.
next
Good
time.
luck.
Thanks, Gabe.
Eve is saying, does transferring a policy to a new name while the previous owner is alive require to be considered a gift or for tax purposes?
Well, that's a good question.
Yeah, like what is the transfer of ownership like? Like what is that?
I don't think. Holy smokes, that is a freaking fantastic question.
Well, it's
You
just
know,
the owner of the
where's-
policy, correct?
If you change the owner, does that?
It's just the owner.
I don't think it
I think
would,
it's an ownership change.
but I would
don't think it
love
does.
to consult with Jimmy Davison on that one before
Then-
giving a yes or a no. That's a great question, Eve, and one that I don't really know. I've never heard of it counting as, you know, a gift for tax purposes, but kind of logically seems like it should be, right?
Well, is the owner of the policy? I mean, do they own the? I mean, I guess they say they own the cash value, but
They do own the cash value, yeah.
yeah.
Yeah, it's transferring an asset.
But life insurance is one of those weird, off the books kind of private assets. So, man, did we just stumble upon something that would be really cool to talk about?
So, I mean, I've had some transfer here from when the parent got it and the transfer to the grandparent. There's no issues with that I've come across.
Let's put a pin in that, Eve. Let's Shauna, if we could get an answer from we got an email. Actually, if you could copy and paste that question, and we can email it to Jimmy, and just get his professional CPA opinion on that. And then I'll check with I have a tax attorney, so I'll also send it to the tax attorney. That's a freaking dude. If that doesn't count.
I think a lot of times what the key piece is what's the cost basis inside of the policy. So think about if I had a home and I paid $500,000 for it and it's worth 600, well, there's 100 a gain there. So that piece of it might be taxable, but I don't know. I've changed ownership to entities before and just sold it off at a cost basis perspective. So I don't know, but yeah, it'd be good to get a CPA's perspective on it from a personal transition from one owner to another.
Yeah, and I bet there'd be like 2 instances. One, like what Living Life is saying, transferring it to a relative for the purpose of just here you go, and then also selling it, maybe because you're trying to sell, I don't know, get out of it or something.
I have a specific question about opening policies for the group that was brought to me by an existing client. So the client, when they open their first policy, right, they're in a state where the protected from liens and judgment is up to $150,000. but they own a secondary home in another state that's fully protected. They want to start a second policy, but they want to do it in that second state. Is that something that they're able to do?
It's possible. I've actually kind of got some questions about it myself, because if that was ever challenged in court, could it potentially be clawed back and treated as if it was business that was written in the state where the client actually lives? I don't know.
I brought that
question, man.
Yeah,
really good.
I got some different feedback. I got well, they could consider it, especially if they get mail there, but they might go and look at the driver's license too. So just, as far as starting, but Linus's question takes it a step deeper. Like, what happens if they do get, in a legal situation? Will that really be protected?
Yeah, well, for underwriting purposes, yeah, they'll definitely look at the driver's license and see that it's in a different state. That's even on the application, and that's typically not an issue, because there'll be instances all the time where somebody's just recently moved to a different state and their driver's license is still in the previous state. So typically don't have an issue getting around that.
Okay. Thank you.
Fern is saying, can you explain why a whole life policy might require a term policy attached to it?
Anyone want that one?
I say Joe takes it. We haven't heard from Joe.
Yeah, good, good call.
Depending on if it's going to MEC or not. So you have to fit inside the box of how much money you make, and you can only contribute 20 to 25% of in your annual income. And depending on your age, the maximum death benefit is compiled of your annual income times 15, 20, 25%. And that is equivalent to your age group also. So in order to fit inside of that, if you're doing a larger dump, you're going to have to purchase more insurance, and term is put in there because term is cheap and it's able to purchase more insurance for you to fit inside the guidelines of a MEC. If the policy doesn't need any term and it's efficient alone just by our numbers, then there's no term applied. It's only to put in there to cover the MEC.
Everybody satisfied with that?
Everybody good? Everybody good?
How'd you do, Joe?
On for just a certain period of time, right, Joe? So it's not in forever, but maybe for 7 years, 10 years.
Yep, 7 to 10, whatever the minimum is.
Cool. Got one more for you, Joe. So Nate Berry saying, Joe, HELOC. Is there any way to get a HELOC without showing income from the IRS?
No, because you have to show income because of the DTI, debt to income ratio. You have to have income in order to get a loan from a bank. So it's your short. No, it's going to have to be annual.
Same with the policies too. It's a great question. It's the same with the policies.
Yeah.
You're going to have to show income to get approved in most cases for the policy. Now, I've talked to people who have had several $1 million that they've been, received an inheritance, but because they left their job and weren't planning on going back, we couldn't get them approved because they were just worried that they weren't a good candidate to continue paying premiums for the rest of their life, right? So
got to get them around the campfire, Jason, teach them how to make that money work for them to produce an income that they then have to pay taxes on, that then allows them to be able to get a HELOC and sell.
Do you know anybody that does that? Who does that?
I have no idea, but if you do find somebody, let us know.
I will. If we can get somebody that knows how to bank and bring people together.
I do know of this event coming up. It's a 2-day live advanced training on infinite banking, teaching you how to make your money work for you. It's going on August 9th and August 10th. Wicked good event. Definitely a place where if somebody's looking for some ways to make their money go to work for them, some strategies to make their money earn something so that it's not just sitting there whittling away to inflation, this would be a great place. I hear it's pretty cheap too. Like if somebody has a policy already, it's only $47. If they don't have a policy, they're going to have to come out of pocket for $67 for 2 full days. Oh, there it is. By the way, just click the link and register. And today only, just like we offered in Wealth Webinar, we will give you a free t-shirt if you register right here, right now from Ask Me Anything. Just make sure you email Shauna at chrisnaugle.com with your shirt size, and we'll send you. It's a really cool shirt. It's one of my favorite shirts we have in the entire catalog lineup.
And will that Beastie Boy that was in that picture a second ago be signing any of the shirts and merch and stuff?
I don't know. We'll have to ask him.
All right. So BZ is saying, looking to start first whole life policy. Will be turning 40 this year. What should I start a policy for? Personal or for my business?
Depends. I would always say start personal, just because you want that coverage. Personally, it might be easier, but that also could then kind of go over your business. If most of your income you would fund the policy with is in the business name, you might want to do a COLI policy, a business policy. That way you don't have to pay tax to take the money out of the company to fund the policy. But if you've got personal income that you can fund the policy with, just do that. If all the income and money is in the policy or in the company, then just do a COLI. And there's other reasons, but I would say book a call with us to talk through that one, because I can't say whether personal or business is a better choice.
Right.
And to that point, I'm going to put in the chat our calendar, which is mentors.beyourownbanker.com. Be able to book a call with anyone from our team. Fern is saying, does it make sense to, kind of off that one question before about the term, but does it make sense to dump in less to avoid the term?
I've gotten this question a lot.
Yeah.
And it literally just comes down, you illustrate it both ways. You illustrate it with reducing the dump in to get rid of the term or reduce the term. You look at the numbers there, and then you run it with the full dump in. I'm going to probably tell you 9 out of 10 times, and Craig, you'd be the one to really ask this. 9 out of 10 times, I would guess the dump in is going to beat the one that you've reduced just to avoid term. But it really is age dependent, because if you're older, the term costs more, and then it's maybe a different conversation.
Yeah.
And there's other factors too, right? Like when you're looking at that, depending on the amounts and what they're trying to do, it depends. But if they're doing like a large policy, $100,000, $200,000, $300,000 a year or something like that, that doesn't make sense to over insure and put extra term on top of that, because it's going to really inflate the death benefit and maybe limit them for future policies. So I've run into that a few times. So it depends.
Yeah, that's what the answer I was going to give too, is that if you do the term, then you might not be able to get a second policy that you want to get like 2-3 years down the road. So it might make more sense to reduce the death benefit so you can get that second policy. So that came up yesterday with a client. They were looking at that and they said, well, I plan on getting a second one within the next 5 years at a minimum. But if they did the term, they couldn't do it. So they're like, oh, okay. So we ended up actually going to a different insurance company to reduce the death benefit so they could get that second policy. And the term was not nearly as expensive. That's obviously Lafayette.
I wish I would have ran that 150 through my policy before buying the 3 Cadillacs.
I gave you how many chances to do this the right time or the right way the first time?
But if he didn't do it the right way, Chris, if he didn't do it the wrong way, he wouldn't be able to tell the story where I had the money across the desk and he's pulling on the money.
That's true.
And I was pulling on the money and he's pulling on the money. I didn't want to let it go, man. And then I got it.
So true.
That's true.
And that was my aha moment.
Story's worth $1 million.
It is. That's a priceless story. So thank God you made that really dumbass move.
See?
Love it.
True.
Drew's reporting back from his call earlier. He said he just got off the phone with policy service and IT is working on it.
That's the kind of service you get here, folks. See, you ask questions and you get answers behind the scenes, and then you've already got a solution getting worked on. So
Tess is kind of going back to, I think, when you made that example, Jason, about how people had a windfall and then they wouldn't have any income and they didn't get approved. Tess is saying, what about a single premium policy if they have a large amount of money but can't support annual payments with a job?
I got this one. That's a great idea, and I've actually had lots of people where they get that one-time big chunk of money, maybe lawsuit, various different things, and they want to just dump it all into the policy. But by doing that, a single premium policy is always going to mech. So the idea there, especially right now in the heightened interest rate environment, would be to take that lump sum, put it into some type of a SPIA, a single premium immediate annuity, where the insurance company is going to pay you interest, and then every single month or every single year, that annuity would kick an annual payment out, and you could set it up for like a 10 or 12 year period so that it matches the period of time that the policy is built for. And then that annuity pays the premium, makes your premium deposits. You don't even need to think about it, and you make all the interest on the annuity that they give you, plus you've fulfilled, you're not a mech. You're no longer in a taxable vehicle anymore.
So, Chris, what comes to my mind, do you remember the equipment financing model we did, and we talked about the caffeinated beast?
Oh, yeah.
So what we end up doing is a really big dump in. So I think it was about $120,000 dump in, and then a $40,000 premium. So in year one, $160,000 was going in. Year two, there was no more premiums, because what we did is we started using the dividends to pay the premiums. So it was kind of like a single pay policy, but you funded it once and then just used the dividends to pay for the rest of the policy. And then you start using that policy to buy things you need and want, and use it as a banking system. But that actually worked out really well.
That was an awesome design. There's a lot of different ways to do it.
Yep.
So Fern had those questions about the term, like lowering the dump in and stuff. And I looked up like who she's working with, and she's working with Carson. So Fern's saying, should I have someone else take a look at my situation to see what is best? Who can I reach out to? My policy was just approved, but I haven't signed anything yet.
Call Carson.
Yeah, Carson, or I mean, anyone on here would take a look at it for you. But I mean, Carson definitely knows what he's doing. But you know, I don't know where Carson went. I wish he was still on here. Shauna, can you maybe email Carson to give Fern a call? And Fern, if you want a second opinion from anyone else on this team, by all means, we're all more than happy to kind of take a look at what you're doing and run it both ways and look at which one makes the most sense. But I mean, at 57 years old, I don't think you should be afraid of the term.
Yeah. And then she also doesn't want to not be able to open other whole life policies too.
You can drop the term anytime. I mean, really, the term's on there for a period of 7 years if you really want to get technical, because that's the max 7 pay, so 7 years. I don't know how much coverage you have. I don't know the circumstances, but I doubt that the term would put you over your human life value and max you out for multiple policies, from buying or doing additional policies. I'd have to see it and look at it, but I would start with Carson, have him look at 2 different scenarios, which will be easy for him to do. And then if you want a second opinion, Shauna just put the chat up, or put I think you already did, but there it is, mentors.beyourownbanker.com.
Yeah, but I would say bring the questions back to Carson. We all collaborate all the time. So, I mean, it's not like you just get access to Carson's mind. Carson's going to talk to Linus, to Brian, to Joe, to everybody to get you the best. So we're all on the same team. So you don't have to get another call, I don't think, with anybody.
Yeah, and I'll show you how that works. So this entire team communicates on a thing called Slack. So every single day, all the money mentors are right on this thing, and they're communicating back and forth. And a lot of times, it'll be case design, or one money mentor has a client that has a question and they might not have the answer, but they know somebody else on the team will. That's how they all communicate. So there's lots of communication going on every single day, every single hour, in regards to multiple client situations and getting a team approach. So you're already getting that.
Yeah, and I'm just going to say from like a logistics standpoint, sometimes it kind of makes a little bit of an issue when you do start kind of booking with other people on our team. So keep it funneled to Carson. Carson's got access to all of us, and we are, here for you and Carson just the same. If you really don't like your money mentor, that's like a totally different thing. We can obviously I mean,
who doesn't like Carson? He's the best.
Right. Okay, so BZ.
I told Carson to reach out, Fern, so you should be hearing from him. And he said, what was the answer? I said, she should get a better mentor. That's all I said.
We don't mean that. So BZ is saying, okay, so if me and my spouse own the business, could we each start a policy, and how would that work?
Of course, yeah. Actually, you could do really cool stuff with that. If you and your spouse own the business, you could both do a buy sell, like a cross purchase buy sell. We did a YouTube video on that, or even a wealth webinar, which is a YouTube video on exactly that scenario. So you might want to check or try to find that scenario. I can't remember the name of it, but that's definitely the way to go, because so many benefits of doing it.
I think it was a wealth webinar we did probably a month ago.
You don't remember what it was called, do you?
Yeah, I'll go look and I'll see if I can find it.
Okay. While we're looking for that video, we'll kind of scooch over to Matthew's question. We got 5 minutes left. So Matthew's saying, so I'm lending with a chunk of money as well as parents, which has not been ran through my policy yet, which I just opened 3 months ago. Could we combine our funds and put them together through the policy and then lend with it? Would my policy give me returns on all of that capital?
I mean, in theory, yes. So if you can combine it all, I mean, it's all family, so I don't see where there'd be an issue with that. The issue I think you're going to have is, since your policy is already in force, if it wasn't built to hold that extra money, you're not going to be able to because of the MEC rules. But again, that's kind of, Matthew, that's one of those things where you just, whoever your money mentor was, just get a hold of them, ask them, hey, I've got X amount of dollars. Is there a way we can fit this into the policy? And then you'll know that.
Cool. And then Fern actually is coming to our 2-day. So while we're waiting we probably got time for one more question. We'll put that back on the screen. Is our 2-day live is Friday, August 9th, Saturday, August 10th. It's on Zoom. You get the replays. And there's the link. go.moneyschoolrei.com/IBC.
Man, that music is chill, huh?
Yeah, it is, isn't it? I keep thinking like there's somebody outside, because I got the garage door open today. Keep thinking there's somebody's got like music on out there. Nice music. And forgot that I have the background night driving music on.
I can hardly hear it for some reason.
I know.
So it's interesting that you guys can't. I can't.
Yeah, I'm deaf.
Very subtle. It's very subtle.
What? There we go.
Now you can hear it, right?
Yeah.
There you go.
No
Now
more
you definitely
questions,
hear
huh?
it.
Gonna jam out for 3 minutes.
No, I don't think so. And then we got.
Is that the last question?
That
Yep.
was the last question.
Oh, awesome. Well, thanks everybody for joining us for another Ask Me Anything happy hour. Thanks for enjoying the relaxing, soothing sounds of Ask Me Anything happy
Chris,
hour.
I found the video.
Yes.
Hold on.
Put it in the chat.
Okay. I had to do a bunch of clicking around here. Let me get the link. So I'll put it in the private chat, Shauna, if you want to.
Whose question was that? The one that had, where's that one?
B?
It wasn't
This one?
Matthew, was it?
Yes. BZ.
Yeah, there we go. BZ.
Hold on.
There you go. So there's your video. Craig
Hold on.
found it. I have been finding it very hard to find videos on my YouTube channel. I mean, now that there's 1,200 of them, it's man, oh man.
Well, it's
Chris,
so
when
I
I-
knew
when I
this was a wealth webinar, so I was able to go back to like a month ago. I'm like, it's probably this one, but it's called Understanding Velocity versus Interest Rate and Protecting Your Legacy. So you had kind of talked about velocity up front, and then we got into the business piece afterwards.
And Chris used to say that all the time. I did a video on that. I'm like, dude.
Oof, I know it's getting.
I can't find it. Oop, let's click on the video.
Yeah, I know. Well, that's what we're creating the carousel on beyourownbanker.com, so people can find the video that's appropriate for them. And also we've got something new that we're launching pretty soon, which is the most comprehensive, organized IBC training of all time. What is it, like 23 hours? So we're going to be launching that under we're bringing back, I'm so excited about this. We're bringing back MSTV, and we're bringing it back full force. And that's going to be how we're going to bring it back, is with that IBC training.
Cool.
Awesome.
Just keep
Anything
adding
else?
that.
Nope.
All right, folks. Thanks for joining us for the smooth, cool sounds of Ask Me Anything Happy Hour. We'll see you next time.